and thank you so much for tuning into this video. We just closed on a house. Woo! So we just purchased our second home of the year, and my husband and I are super thankful about that. And in this video, I want to talk with you all about how we financed that property. And we did that through the loan product called the Homestyle Renovation Loan. And if you're not familiar with the Homestyle Renovation Loan, you may be familiar with the FHA 203K loan. And essentially what those loan products are a way to finance the purchase price and the renovation cost into one mortgage for a homeowner. And with the Fannie Mae Homestyle Renovation Loan, investors are also able to use this loan in order to acquire property and renovate them as well. And so the number one benefit of this loan product is that you're able to purchase a home that needs extensive repair and add the renovation cost in. And so, as you guys probably already know, if you buy a home with a mortgage, a conventional loan, that house has to be livable and all the major service systems have to be operating. So the Homestyle Renovation Loan, 203K loan, it allows you to get a house that probably is a fixer-upper or needs a new roof or needs plumbing or whatever that is, and buy that house and compete with people who maybe have an all-cash offer or are using a hard money lender. So again, we just purchased a home with the Homestyle Renovation Loan. Let me give you some information on the process, what happens next, how it all works. So if that sounds interesting to you, please keep on watching. When we started this process, we were not really looking to purchase a home. It's kind of weird how it happened. So let me give you the backstory. So my husband and I own a home in the same zip code as the second home that we purchased. We always said that in this particular neighborhood of Baltimore, which is Forest Park, we love the neighborhood. We love how most of the homes in this neighborhood are either semi-detached or just single-family homes, as opposed to row homes that are in the neighborhood that we purchased the first home. So we were like, man, we would really like to live in this neighborhood. And so there was one particular house that we saw on Zillow, and we drove by and we were like, man, this is a really nice house. It needs work. It was a fixer-upper, but a lot of the work required was like cosmetic work. And we were like, man, this is a nice house. It's on a corner lot, semi-detached. But at that time, the price was like way too high for our budget. So, you know, you guys know that if you like show interest on a house on Zillow or you heart it, like Zillow will constantly send you emails of what's going on with that property, if there's any price adjustments, etc., if it goes pending, etc. So we started getting notifications that the price was decreasing. And so one day it went down like $20,000 and it suddenly became, you know, in our price range. So we were like, oh my God, let's go check out this house. So we called our realtor, which is Rashawn Taylor. I have a video with him on my channel, so check that out. He is the investor guru of Baltimore, so definitely hit him up if you're looking in Baltimore. But I texted Rashawn and I was like, hey, we want to see this property, meet us there. So when we got there, Rashawn was like, hey, this is a good property to learn about fixing up homes, to learn about flipping, birth strategy, whatever you guys are looking for. This is a good start because it's really just cosmetic and it's not like you have to strip everything down to the studs. This is a property where you're going to be able to paint, redo the floors, redo the fixtures, etc. But this is a solid house. The comps are solid. All of the comps are like 260,000 plus. And at that time, the house was at 165. So he was like, I estimate this house to need about $30,000 in repair and you're still going to have a lot of equity into this house. So I think it's a solid option. So my husband and I were both like, we really want this house, but we were skeptical because we at that time had just bought a house maybe 5 months prior, so we weren't sure how the financing would work or if we would be able to get the house. So I text our loan officer, which is James from Secured Funding. We always use James because he is great and he is a principal of that company. And James was like, well, you have the option to do the renovation loan or hard money. We were a little skeptical about hard money at the time because we didn't know much about it. So I was like, okay, give me information about the Homestyle renovation loan. And so that's when he told me what I just told you guys, which is essentially you can get this house and you can add the renovation cost into your mortgage, and if the numbers work out, you would pay for the property plus the renovation cost with your monthly mortgage. So I'm like, that sounds really cool, right? And from there, we started the process of getting pre-approved, and same pre-approval process that you do with a regular mortgage, which is sending in your well, actually, he already had the W-2s because we were actually already pre-approved because the pre-approval didn't expire from the last property that we purchased. But if you're just going into this process, you would send your W-2s, your tax returns, your pay stubs, bank statements, ID. They probably have some internal application that your loan officer would use. But essentially, you send them whatever they ask for and they pull your credit. And then you start the process of getting the home approved, right? Because the numbers have to work out in order for this to make sense. Okay, so again, the house started off at $200,000, and then they were able to bring the house down to $165,000, and then we put in an offer at $160,000 and it was accepted. So from that point on, if it was just a regular conventional mortgage, then the process would be, all right, we do the inspection, we do the appraisal. If everything turns out good, then we close. Not with the Homestyle renovation loan. I can tell you right now, we were under contract from September is when we got under contract, like the first week of September all the way to the second week of December. That is how long it took us to go through this process. And I can tell you many times I thought this transaction was going to fall apart because there's so many moving pieces in these renovation loans. It's a way more tedious process, and there's way more moving parts, which I'm going to explain to you. So just know that we were under contract for over 100 days, right? So it definitely is a lot more work. But the first thing that we had to do after getting the offer accepted and being under contract was getting a contractor, right? Now, what I did, right, is I went on to Craigslist, Facebook, Google, Thumbtack, Angie's List, and TikTok, Facebook, like just any platform to try and find contractors, right? And so I just started calling contractors, asking them, hey, we're doing a Homestyle renovation loan. Most of them are familiar with 203K loans. So I just said, we're doing the 203K loan and I'm looking to get a quote, right? And so some of them didn't call back. Others were like subcontractors. So I'm like, no, I need a general contractor to oversee this project. And so what happened was I ended up needing a solid 7 contractors, right? And so I would meet with them every day. I started on like Monday and we finished with the last contractor, I think, on Saturday. And I would just line them up to come out to the house and meet me there and walk through the house. And as we were walking through the house, I started to learn more about the property because each contractor would see something that the other wouldn't see. And so they'd be like, oh, the heat sump is fine, but you need a new condenser. Okay, that's good to know. So when I meet with the next contractor, I know to mention like, okay, it needs a condenser. And then also new ideas started to develop with meeting with these contractors, because I remember meeting one contractor and he was like, oh, these stairs, these are good stairs that can be salvaged. We can paint them instead of just putting like new flooring on the stairs. So a lot of them were coming up with like really innovative ways to save money, as well as giving me ideas that I did not think of. So that was really helpful with meeting the contractors. So some contractors that I called, they wanted to be paid like up front to just give me pricing. So for example, one company that had really awesome reviews, they wanted $700 just to come out and give me the price. And I was like, heck no. First of all, I'm not paying you $700. And then if you're charging me $700 just to come out, I already know your quote is going to be like through the roof. So I don't even need to call you, because that's just too much. So those contractors who were charging, I would say to you, if you're going through this process or thinking about it, don't even engage with them, because like, why do I have to pay you to give me a price? And I understand like they have to come out there spending their gas, but like, no, that's just part of it. That's part of your job. So anyway, met with 7 contractors, and the pricing was all over the place. Like one person, the first guy was like $73,000, and I was like, okay, we got to pull out of this, because that's like way over the price point. Rashawn, our realtor, you told us it was going to be $30K, and so that guy was just like all over the place. Then another was 42, one was 37, one was like 20, I think, and finally the guy that we selected was right at like $30,800, right? So that was right on target with what we were trying to spend anyway. A good thing to know about the Homestyle renovation loan is that there is a contingency reserve, which is 10% of whatever your renovation budget is. Just in case anything happens, there is that extra subset that they can use to tap into. And even if you want to make changes later on, knowing that that contingency reserve is there is really cool. So once you select the contractor, then they have to do a quote, and with our lender, they had their own internal paperwork that they wanted. So the contractor had to go in, write down his quote, write down the pricing of the material and the labor, and then he also had to send in like some of the other jobs that he's done, his W-9, and also his license information, and make sure that his LLC is in good standing. So those are some of the documents that are required from the lender in order for the contractor to be approved. So just to recap, you have to be pre-approved, right? As in your finances, your credit, your income. The house has to be approved, right? Because you have to make sure that the numbers match up for what you're trying to do. As in, the house can't be under contract for $500,000. Your renovation loan is $100,000, but the house is only worth $300,000. And then next, your contractor has to be approved. They have to make sure that your contractor is licensed to do business in the state that you're in. They have to make sure that they are qualified, that their business is in good standing, that they have insurance, all of that stuff, right? Moving on. So when we initially did the quote, I don't know what happened, but something happened with the porch when a car hit the porch, right? And so now the porch had to be repaired. So the seller let our realtor know that they were going to have their insurance come out and take care of the repairs. But at the time, we were concerned that we would close before the insurance came out and the adjuster came out to fix the porch. So we decided that we would renegotiate and say, all right, well, it's $5,000 for this porch to be repaired. Actually, it was $3,500, but we told them it's going to be $5,000 for this porch to be repaired. Take that off of the price, right? So they negotiated for $5,000 to come off the listing price, and that $5,000 was now what we were going to use to fix the porch. So that brought our price up from $30,000 to $35,000, and because it was over $35,000 now, we needed to get a HUD consultant. Man, this is just traumatic even talking about all the work that we had to put in to make this happen. So now, because we were over a certain amount, which for us and our lender, it was $35,000, we now had to get the HUD consultant. Now, you may say, Jada, what is a HUD consultant? I'm glad you asked. So a HUD consultant is basically like a project manager, right? So their job is to be the intermediary between the contractor and the buyer, and they're really supposed to protect the buyer as well as the lender to make sure that the contractor is meeting their obligations. So to reiterate, the HUD consultant is there to protect the buyer because they are the ones who have to sign off on what the contractor has done in order for the contractor to get the next draw. So a draw is basically when they get paid, right? So the HUD consultant meets you at the property, right? So in my scenario, the HUD consultant met me at the property. We went through everything that the contractor is supposed to do. Before we met, I sent him the work write-up that the contractor did. His job is to verify that all this work needs to be done, and he will also verify if other work needs to be done. So for example, my contractor didn't put on his original work write-up that he would be taking all the vining off of the siding on the outside of the house. Obviously, we agreed to that, but I guess he did not write that down, so the HUD consultant had to add that. And the HUD consultant's write-up is very detailed. He takes a picture of every angle of the house, every room in the house, the basement, the electrical, the plumbing, the HVAC, everything. He takes a picture of it, and he writes down how much the material is, how much the labor is, how many draws that he will require. Initially, he put on R6, as in it's going to take 6 months. Every month will be a new draw. But I told him, I don't think that this house is going to require so long of a draw. So can we make this 3? And he was like, yeah, that's fine as long as your contractor agrees. Our contractor agreed. He writes on there how much the contingency reserve is. If the house is habitable, he writes down his recommendations, and that is what he submits to the bank. Once the lender approves it, then the HUD consultant sends it via DocuSign to the buyers, to himself, and to the contractor, for everyone to sign and be in agreement of this is the work that needs to be done, this is the time frame that we agreed to, this is the price that we agreed to, this is the contingency reserve that we agreed to, and we're all in agreement and let's move forward. So now when our contractor completes 1/3 of the work, then he will go to the HUD consultant and he'll say, hey, I've done 1/3 of the work, pay me my money now, right? And so the HUD consultant will come to the house, verify the work that was done, make sure it was up to the standard, up to the code, make sure that it was done right, because he is an expert. Obviously, he's protecting us as the buyer, because obviously I don't know a whole lot about construction and renovation, so he's there to make sure that this work was done up to standard and up to code. And once he signs off on it, then he goes to the title company and he's like, okay, let's have that next check. So his fee for this was $800 up front, right? We paid him $800 up front for him to come out and commence the work. And then every draw, he's going to get a couple $100. I think it's $375. I'm not sure, but there is a cap that he cannot go over as the HUD consultant based on the guidelines. So your loan officer could tell you more about that. But that's the cap for him. Every draw, I think he gets $375. And then he just makes sure the work was being done up to standard. After the HUD consultant does his write-up, the next part of this process is for the appraisal. Now, if you've ever bought a home with a conventional mortgage FHA loan product, then you know the appraisal is usually someone coming out to the home, looking at the comparable properties, and then coming up with the value of this home. And so basically, you cannot go over this amount with a conventional or FHA loan product, right? And if you do, then you can renegotiate. Okay, this is kind of the same. The only difference is the appraiser is not physically going to the house. They're looking at the contractor and the consultant's work write-up, and they're saying, okay, based on the comps in this neighborhood, the recently sold comparable properties, and based on the after repair value, this is what we think this house will be worth when it's done, right? So he's looking at the finishes that your contractor's using, he's looking at the material that he's using, and he's looking at what the other houses in the area, what they were selling for, what they have in their property, and then he comes up with the value, and he sends your lender and your loan officer his suggestion, and based on that you can either proceed, or you have to negotiate, or you have to go back to your contractor and say we need to get cheaper finishes. I don't know. In our scenario, it came back way over what our renovation and purchase price in total would be, so we're good. We're getting instant equity in the property. Okay. So once that is done, at this point, then it's really just your lender getting more information from you, your updated pay stubs, your updated bank statements, all of that stuff, and you're preparing to close. Now, what happened in our situation as to why our closing took a little longer is because we ended up winning an incentive and a grant from the city of Baltimore. Thank you so much, city of Baltimore. We won $5,000 from the Live Baltimore Trolley Tour, and I have a whole video, I have a whole series actually about the grants and incentives in Baltimore City, and I am well versed in the grants and incentives in Baltimore City. So if you are a home buyer and you're looking to purchase in Baltimore, give me a call. I would love to assist you and help you as your realtor. I know a lot about the grants. So anyway, my husband and I won the grant of $5,000. And so that prolonged the process because we then had to wait for the city of Baltimore to send the check of $5,000 to the title company, and we also had to wait for them to send the BIB, which is basically them putting a lien as a second lien holder on the property. So if we sell before, I think it's 5 years, then they can collect their $5,000 back, which obviously we don't plan to do. But we had to wait on that from the city of Baltimore. And then the next issue was the allocation of the funds. So originally the $5,000 was supposed to reduce our down payment and closing cost, right? That didn't happen. So apparently, because we were not first-time home buyers, they could not allocate the money towards our down payment and closing costs. So instead, the $5,000 came off of the purchase price. And that actually turned out to be advantageous, because instead of paying so much for the mortgage, it was reduced by, I don't know, I think it was like $40 or $50, which doesn't sound like a lot, but actually it really is. So that even lowered our price more. So I know I just did a lot of talking, but I hope this video was helpful in learning more about the process. Let's talk about the closing table. So at the closing table, what happened was they had like a regular closing, all the disclosures, the settlement statements, the deed, all of that was there to be signed. The only difference that I learned while there is that the first draw, which is the material draw, they give you the check, right? So they gave it to us. And I'm not gonna lie, I was nervous because I was like, do I just give this to him? Like, what if he just runs off and that's it? So the loan officer advised me to call the HUD consultant, and I called the HUD consultant, and he was like, yeah, you give your contractor that check because that's how he's gonna get started buying the material and getting started on the job. So what my husband and I did is we went to Home Depot, we bought a lockbox, we put the key for the home into the lockbox, put it on the door, and then we left the check for the contractor in the cupboard for him to get. So therefore, we don't have to keep going to Baltimore every day whenever he wants to get into the house. He has the lockbox, he has the code, he can get in, his subcontractors can get in, his workmen can get in, and we don't have to, you know, like, bother this guy. So that was the process from start to end. In recap, it took about 115 days for us to get this home. Some of that was because we had to renegotiate the purchase price, and because we had to add some work in later, and then we also got the $5,000 incentive. I was told typically it takes about 60 days from start to finish in order to get this process done. We were just kind of special that we took a little longer. But that was the process all in all. So if you guys have any questions, please comment them down below. I'm going to put the contact information for myself, for Rashon, which is our realtor. And I'm also going to put the contact information, well, the link to the playlist that I did about the Live Baltimore Trolley Tour. So if you're interested, you can check that out. So comment down below if you have any questions, anything that you want me to address, and I will see you guys in my next video. Bye.